All right, good morning and welcome to followmetrades.com. Saturday scanning, looking for the next great trades. Like I said in the invitation, I typically take some time on Saturday and scan the market, kind of stand back, look at the big picture, see what's going on, and try and identify the next great trades. So I'm doing that. I invited you here, and we're going to check it out. Again, let's make it interactive. Ask questions in the chat box as we go along, by all means. I'll just introduce myself. If you don't know me, I'm Dean Jenkins, founder of followmetrades.com, located here in Olympia, Washington, about an hour south of Seattle. I've been trading for a very long time, over 25 years. And like most people, it took me a little time to get it all figured out, but I've dialed into a system that's pretty repeatable. Trading is not easy, but we've been able to come up with a system, and it's all, the key thing is risk management, risk control, and then being disciplined about your trading. So last several years been pretty successful at it. 8 years ago, launched the service, followmetrades.com. This has been fun. I like talking to traders and trading, and so this is good stuff. But hey, good morning and welcome, or afternoon, depending on where you're calling from. All right. Like I said, trading is not easy. You'll see lots of ads. Oh, this is easy. We'll show you how it's not easy. It's hard. But it can be done. And finding great trade candidates can be, like I said, finding a needle in a haystack, right? There's over 10,000 publicly listed companies in the US on the markets, and then there's ETFs and other instruments. So how do you go find great trades, right? Like I said, it's a needle in a haystack. So let's try and make this a little easier, right? I'll show you how I do it, and I'll share the trades that I find. And then I'm going to extend an offer at the end of this. If you like the process that we're using here and you'd like to follow along, be part of it, I'll give an offer where you can check it out. All right. Hey, trading's hard. Not every trade wins, some lose. You got to use risk management, right? Everybody knows that. Again, I've been trading over 25 years, and like most people, started off, made some mistakes, but now got a system that I'm pretty happy with, and it produces pretty good results year over year. Right, and those are on my website. I believe in complete transparency, so the yearly results are posted, and every single trade that we've taken in the service and are counting toward those results, which is all the ones we send to the subscriber, are posted on the website. You can drill into that at any level of detail. All right, housekeeping. What are we doing here? I'm going to explain the trade setups that I'm looking for, right? Look at a chart, you got to have some criteria. So I'm going to explain that quickly. And then I'm going to walk through, how do I scan, right? How do I start narrowing that haystack down to, be efficient with your time and try to find good trades, right? And then I'm going to find some great trade candidates. I've had a little peek ahead. They're out there. There's some good ones. I'm going to show it to you. All right. And then after I show you the ones I'm interested in, I'd be happy to look at any trades or charts, stocks that you're interested in, and offer my analysis, my opinion based on my tools. I'll summarize the candidates at the end, and then I'll extend an offer if you want to follow along, if you like what I'm doing here. Okay, stay with me if you want to get the most out of this. All right. And Rick says, happy Saturday. Well, happy Saturday to you. I don't know about your part of the country. Well, I'm here in the Northwest, just south of Seattle, and man, the weather just finally turned nice. It was 80 degrees yesterday. Oh, finally, because winters are long and wet here in the Northwest. It's beautiful. It's beautiful out today. So I'm going to find some good trades here, and then I'm going to go outside and enjoy it. All right. I like quotes. Benjamin Disraeli, the secret to success is being ready when your opportunity comes. I believe that. And Louis Pasteur, in the field of observation, chance favors the prepared mind, right? You got to have a plan. You got to have a strategy, think about what you're doing, and then go execute, right? And here's what I've learned. So I've been doing this a long time, and I've been successful for almost that amount of time. Right? To be a consistently profitable trader, you got to do this. You need a plan. You got to have great trade setups with a high probability, higher than 50, right? Outcome. You got to use great reward to risk ratio, right? The trade's gotta have the potential to make more than it would lose. Not every trade's gonna win, but you want your winners to be big, losers small. That's my whole take, right? You gotta manage risk and you gotta manage the trade once you're in it. All right. Here's some of the tools and setups I'm looking for. We're gonna run through, I'll show you real quick, right? But I use Dow theory. It's some rules for, do we have a trend? Has the trend been confirmed? Are we going up or down? I use Ichimoku Cloud, simple version of it. I use this very, very simple version of Elliott Wave. Some people get put off by Elliott Wave. I don't blame you, because some people overcomplicate it, right? Elliott Wave is nothing more at its core. I'll just draw a picture here on the chart. I'm gonna change that pen color, right? Quite often when stocks break out, they do this, right? Big move up. After every big move up, there's going to be a correction. And after that correction, typically there's another move up. So as we see this happening, we try to join this. And then we look and say, at some point, we expect this to correct. We can trade that. And then after the correction, we look for evidence that it's going to do this. So Elliott Wave simplified. Impulsive move, corrective move, follow through. That's all we're looking for. Exact same thing to the downside, big move down, correction, follow on. That is what we're looking for. No need to make it any more complicated than that. There's some tools to measure it, some Fibonacci retracement and extensions, okay? Overriding criteria for my trades is we need to have a high probability outcome, right? Meaning the indicators and the setup and the proof is there for trying to trade, right? We're not just my neighbor told me that, he's got a buddy that works at Microsoft and they're going to launch this thing and it's going to take off, right? That's not proof, right? So we look for proof on the chart. Price action is the only reality in the market and it tells the truth. We look for great reward to risk ratio. So again, if the trade wins, we want it to make more than if it loses, because, doesn't always work out. Some trades lose. It's the unpleasant reality of everything. Dow theory, this portion of Dow theory I said I'm looking at, right? Charles Dow, back in the late 1890s, did quite a bit of market theory research. And he said, hey, an uptrend, stocks don't go straight up in a straight line. They kind of do a staircase thing up, right? Because as long as you got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, it's an uptrend, right? Because it's going to pull back on the way up, right? This is going to happen. As long as these pullbacks stay above the last pullback and then go up, it's an uptrend. Downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. As long as that continues, it's downtrend, right? Uptrend begins, proof, 3 data points, high, higher low, new high. And it's an uptrend until it doesn't go up anymore, right? High, higher low, no new high, lower high, goes below, uptrend's over. Downtrend's begun, right? Because the end of an uptrend is the same as the beginning of a downtrend. Low, lower, high, new low. There's a downtrend. Oh, it's over. Didn't go lower. Took out that high. So simple, right? Once you've had it explained and you use it, oh man, look at that. But like so many things, right? We learn, right? Get it pointed out. Hey, and Rick saying, thanks for sharing your time. Thank you for being here, Rick. Rick's been a customer for a long time. And glad to have you here. All right. Ichimoku Cloud, right? Ichimoku Cloud is no more than a different way of doing moving averages. It's 3 different moving averages that combine in Ichimoku Cloud. And, moving averages are the most popular indicators on the planet. And again, Ichimoku Cloud is just a visual way of doing 3 different moving averages, a little different way of calculating them, right? But if you look here, right, Ichimoku Cloud's got this Tenkan, which is a fast line, the Kaijun, which is a slow line, and then what they call span A, span B, which make up the cloud, right? And they calculate, so a simple moving average is calculated simply by taking the closing price of some number of price bars back and taking the average and then plotting the dot. And then the next day or the next period, you do it again, pretty soon you get a line, it's a moving average. Ichimoku Cloud, rather than taking the closing price, takes the high and the low and averages them. So it encompasses all price movement, which is important, right? And then we have 3 moving averages. Okay. The classic way to use Ichimoku Cloud is you look for a crossover, Tenkan over Kaijun. and you look for the cloud to be green, you take price above the cloud, right, to Kumal, right, for a long trade, and below the cloud for a short trade. Okay, so we look at that. It's one of, I'm going to show you on the chart about 5 indicators. Right? I use Ichimoku Cloud. I use Dow theory, which isn't an indicator. I use a couple of moving averages, price oscillator, right? So we just want them all to, I don't go, oh, it's above the cloud, take the trade, right? I combine that and go, is there compelling evidence on a complete analysis that makes you convinced about the trade, okay? Right, the cloud is cool because once you break through, it can predict support areas. Right, we're going to pull back, Dow theory, high highs, higher lows to this, and then go. Right, and then once it breaks the cloud, breaks through, you go, oh, trend probably ended. Okay, Elliott theory, Elliott wave theory, I showed you. Right, we're just looking for an impulsive move, correction, and follow through. That's it, simple. And I'll show it on charts. It'll make more sense, hopefully. Okay, risk management. So, I showed you a couple indicators. I'm going to show you a couple more that I use. Doesn't matter, right? There's other indicators. There's other analysis techniques. There's thousands. Whatever indicator or setup you use in your trading, risk management's the same, right? When you go into a trade, you have to go into it, think, what happens if this trade loses? Because it might, right? It happens. How much am I willing to lose? Most people go in going, wow, I'm going to win, right? This is awesome. My RSI, my MACD, my whatever is giving me a buy signal. So I'm going to go buy it. I'm going to win and I'm going to make money. And this is awesome. You got to ask yourself, what if it loses? How much would it lose? How much am I willing to lose? And it has to be a pain-free level. It won't be a setback. I use 2%, right? So if you got a $100,000 account, then my rule would say you can't lose more than $2,000 on any given trade. That's not how much capital you put in the trade. There's a formula, right? There's a formula for it. And, basically you take the entry and the trade exit point you would exit the trade, which you predetermine, right? You go, oh, if this happens, I want to be out, right? And you go, okay, if that happens and it's at my exit point, you divide the loss per share into $2,000. You go, oh, that's how many shares I would use, right? How many shares I would trade with. So a little bit different. You go, how much would, if the trade loses, how much would be acceptable? You have to determine that. And you have to determine on the chart, trade exit point. If this happened, I would exit the trade, I would take the loss and I would move on. And if you don't, then the loss has the potential to get bigger and bigger and bigger and bigger and really be a setback. All right. Lou's asking about Thursday's move. We're going to look at the chart just a second. Okay. All right, trade management. Once you're in the trade, right, it's really important. Trading is like 30% technical in terms of setup and indicators. It's 70% at least psychological, right? Your head. Because it's possible, you may have experienced this, that there's some emotion, right? When you get into a trade and then it's going the wrong way, you get angry, you get scared, whatever, fear. And then if you're in a wow, this is awesome, this can't lose, right? You have greed kicks in, right? And then that can turn to fear later, right? So emotion happens, and the way we overcome that is by having a plan, right? Before we ever put a trade on, we have a trading plan and a set of rules, and a script has been written that we're going to follow to the T. And part of that is trade management. So I get into a trade. Wow, it's going to, where am I going to take profit? How am I going to trail my exit point, my stop? Right? Could I add to the position without increasing risk? You got to stay with the winners, right? Big winners, small losers. You don't get big winners if, it moves a little and then you jump out, right? That'll make you a break-even trader. You get small winners, small losers. And then you got to exit the trade at the right time. So that's trade management. And you just script that all out ahead of time, right? And like, this is an example of trade management, right? We take an entry and we move our exit point, as because it's not going to go straight up, higher high, higher low, higher high. And we just start moving our exit point to support levels in an uptrend, right? And then finally, when it breaks through, we go ahead and close the trade, and we take strategic profit all along the way. All right, scanning. So that was just a quick look, and we're going to look at charts and show the indicators and setups and stuff. We're going to learn a lot of charts. So not just slides. All right. So for scanning, here's what I'm going to do. I'm going to walk through. I like to just step back, at least once a week. What's the big picture? What's going on in the market, the economy, the world? And then I create kind of what I call a thesis. And then I narrow this big list down to a manageable list where I can actually look at a group of charts. And I apply my indicators, my trade rules, my setups, try to find some good ones. Okay, so we'll do that. All right. But first, does this work? It's a fair question. Let me give you a preview. Okay. In my service, I run an alerts signal service for trades, stocks and options. And we run a live session Monday through Thursday every morning. And in that session, it's kind of similar to this, where we're looking at charts and we're qualifying trades and we trigger them. We send them out to the subscribers. And this is what we call our watch list. Right? This is a watch list that all the customers have access to. And we go, hey, here's a bunch of long trades that if this following criteria happens, could be a good trade. And then we track those and say, okay, they triggered, the entry criteria was met. Right now we track how'd they do. Okay. So like, I'll just show you on a chart, right? And there's no way I could make this up and go back and go, let me go find some charts that did well and put them on this list and, fool people to think that we found these, right? Because I'd say a third of the people here on this call are existing customers and they watch us create this list, right? And if I were trying to make something up here, they would already be in the chat box following me. So this is real, right? We keep it real here. All right, so these are trades we identified in advance that have triggered, and we'll see how they're doing. APP. And you'll see as we look at some of these charts or companies you may not have heard of, and you go, well, what about Microsoft and Tesla and Apple and Riot Blockchain? Oh, we'll trade those. But we're not just focused on these marquee, in the news all the time companies, right? Because we don't really care about that. We care about making some profit on winning trades, and we scan the whole market, right? And then find good candidates. Sometimes trades you never heard of. This is APP, Apploven, right? Now we do look at market cap. We look at market liquidity. Right? We want to trade good quality stuff, right? But maybe some company you never heard of, right? So APP, we took an entry here, right? In advance, said, hey, if this happens, we want to take this trade. It happened. We took the trade, right? Got in at $14.95. It's at $17. That's a $2 profit on a $15 stock, right? That's about 10%. That ain't bad. Baidu was a short, meaning we're betting it's going to go down. We took our entry here and it's kind of bobbling around, but it still could go down. So this one's kind of sitting here just below break even. That's fine. GIS, General Mills. That's not very sexy, is it? Cheerios. Well, it's sexy if you took an entry here at 81.93 and it's currently sitting at 88.63, $7 move on a $80 stock. That's pretty good. Microsoft, we do trade marquee-ish stocks when they are good. Microsoft. We called an entry on Microsoft recently at 379. Here it is, 307.26. Nice impulsive move going on. So that's an example of what happens, these setups we're looking for, how they're doing. And, not every trade's going to win. We'll be clear about that. Anybody, you see people claiming, wow, the last 50 trades, 100% win ratio. Yeah. Really? Show me. All right. Back to the slides. Okay. Scanning. Go find some trades. big picture right now, today. So let's just, look backwards. Last year, 2022 was a big down year. S&P 500 was down 21.43%. And that was fine because we made about that much in profit because down moves can be traded. So that was last year down. Currently, this year, 2023, indexes are currently in a modest uptrend. And I call it modest. It's been difficult, no question about that. All right, here's the beginning of the year. Right, there's the beginning of the year price level. We're up, right? It's been a challenging year because this isn't a smooth, impulsive move, right? We're up, big pullback, now we're up, challenging new highs. And now Lou was asking, is Thursday's move considered impulsive follow through from Friday last couple of weeks? I'm looking at the S&P 500 on a daily chart, right? So Thursday and Friday were big moves. What's important here, right? We do have an uptrend. We have high, higher, low. See how this pullback didn't go below this? And now we're heading to a high. And what's important here is if we break through this prior high, right? Start to challenge it, but we would be concerned and watch if it would reverse. It got close here and reversed. So let's watch this level on the S&P 500 on a daily chart. That's the analysis on the S&P 500. So big picture. Current indexes are currently in a modest uptrend. There was a lot of talk about the recession and, GDP had shrunk and inflation and all kinds of, rates going up and all that kind of stuff. That was real, right? But it seems like it's a soft landing so far. The latest GDP numbers were positive. The forecast was 2%. They came in at 1%. Not as good as forecast or as hoped, but it wasn't negative. Right? Positive GDP growth. So the economy is growing slowly. Earnings have been pretty strong. We're halfway through corporate earnings season right now. Pretty strong. Now, any weakness gets absolutely punished, right? Absolutely punished. But so far, here's a quote from FactSet, right? Earnings season's been better than expected. Of the 260 S&P 500 companies, so a little over half have reported, 80% have reported positive surprises. And that was a Friday report. All right. The recovery, this uptrend, right, coming up from the 21% down market last year, it's not been broad-based, right? It isn't the whole, the S&P 500 is 500 biggest companies in the US, right? But it hasn't been all 500 companies going up. It's been led by some sectors only. And tech and communications were the big ones. I'm going to show, where'd you get that data? I'll show you, okay? So my strategy with this big picture is, let's go look for trades, individual companies in sectors, next leg of bullish recovery. Okay? And this chart should hopefully show that. Okay? So what I've done is taken a snapshot from this website. This is a cool website. If you don't have it bookmarked, you haven't looked at it, you might want to consider it. Sector tracker, the spiders, SPDR. So this company manages these ETFs. These are huge ETFs, right? XLC, which is communications, XLY, consumer discretionary, staples, XLE's energy, financials. Okay. These are big ETFs. These are super high quality ETFs, and they represent these major portions of the overall market. Okay. And what's cool is this is 1 day, 5 day, 1 month, 5 months, 6 months, year to date. So I took snapshots, put them side by side. This side by side comparison, I think, is what's important. Okay. So year to date, S&P 500's up, coming back up from the lows of 2022, right? But you can see, as we said, and as Lou is echoing in the chat box, right? This S&P 500 is positive for the year, but it's not all sectors, right? In fact, there are sectors that are still negative year to date: energy, financials, healthcare. Utilities still negative for the year. Some that have very, they're kind of flat, right? Industrials, right? But some sectors are really driving the whole thing, right? Communication services, 23.75% year to date. Technology, 19.91. Now, technology and communications were ones beat down last year. Consumer discretionary, 14.18. Okay. Now we look here at a 1 month move. Okay, who's starting to head up, right? In the last 30 days versus year to date, which is 4 months, right? Who's starting to head up? And what I'm looking for, you just look at this and you go, okay, the the recovery, the market heading up has been led by a couple sectors. Do you want to go long right now in communication services? I don't, right? It's already moved. Call that 24%. Do you want to go long in technology? It's up 20%. Right? Remember, in the back of our mind, we got Dow or Elliott wave theory that goes, yeah, when there's a big move, at some point there's going to be a correction and then another move, right? I really don't want to go long here. That would be a drag, wouldn't it? You don't have to. All right. So we study this and we go, well, gee, what looks interesting? Energy's down for the year, but in the last 30 days, it's starting to move 5%. Same with financials. Financials, it was artificial, in my opinion. That whole banking crisis was very localized to a couple of very high-profile banks. And it caused people to panic, a little bit, go withdraw money from perfectly healthy banks. It's coming back. Right? So financials for the year down 4%, but starting to come back in the last 30 days. Healthcare down for the year, starting to come back. I put a dashed line. These are a little weak, it's already jumped a little bit, but also utilities down 2% for the year, up 5% the last 30 days. So for me, these are target areas, right? And now I'm not going to go trade just based on this, but what it does is it focuses my attention from the whole market down to a portion of the market. And now I'm going to look inside those sectors at individual companies and see if there's anything that meets my criteria. How do I do that? Well, this is where I go to a trading platform. And what I've done, so these 4 sectors, energy, financials, healthcare, utilities. What I've done is brought those companies into a radar screen here in TradeStation. What it allows me to do is put in a list of symbols and then apply some indicators in a grid. Now I can sort and filter and do all kinds of cool stuff here. And so what I did was brought in all the companies from those 4 sectors, and it turned out to be like 2,000 companies. Well, when I started, and then I apply another level of filter. Right? So I'm going to go, what's the last price, right? And some of these, if you look at them, they're going to be penny stocks that are on, because I just go here, insert symbol list, Reuters, industry groups, financials, right? And here's the subsectors of financials, right? And you see there's a lot of companies. So I just put them all in, and then I filter. Like you see, let me sort here on last price. You'll find half of them are below $1 at penny stock. Some of them are 2-3 cents, right? Well, I'm not trading those. $1, I'll trade low price stocks, but I'm not trading penny stocks. Okay, so I filter and I knock off the half that are penny stocks. And then I go filter based on volume average volume, 10-day rolling average, right? And I'm only going to trade things that have a 10-day average of at least 1 million shares a day. Why? I want to trade liquid stocks that have a broad market so that the bid and the ask is close, right? And that there's a market out there so that I can buy it. And then when I want to get out, I can sell it. Okay. And typically things that have, pretty deep liquidity over 1 million shares a day also have robust option markets. And I want to primarily trade with options. Big advantage to that. Okay. So I took a couple thousand companies in the 4 sectors, threw them all in here, sorted, filtered, got rid of the penny stocks, got rid of the thinly traded junk. And now I got me a list of 275 real companies in these sectors. Okay. Now I like looking at charts, but I'm not going to go look at 275 charts. Okay. I don't like it that much. So now I told you I use Ichimoku Cloud, and I told you that when something breaks above the cloud or below the cloud, that could be the indication of a new trend. So let's sort this. And luckily, right here, new below, new below, new below, new above, new above, new above. Right. So I got a handful of these, right? 20 symbols or something interesting and unique within these sectors that I'm interested in. Right. I just took the market of 10,000 down to 2,000, down to 275, down to 20. I'll look at 20 charts. That ain't too bad. Oh, it's 29. Okay. Cool. All right. I said the market's overall going up. And this first set here is below. I'm more interested in bullish trades right now. But so we can go look at a few of those, right? But what we do now is I got this linked to my chart. And up here in TradeStation, you can link the radar screen to the chart. So if I click on the symbol, boom, it automatically loads it on the chart. Boom. And here's DCP Midstream Limited Partner. When you look at a chart like this, here's a tip. If maybe, I know there's experienced traders on the call. Any of the experienced traders here, when you see this gap and flat, what does that mean? Anybody know? I know some of you have been through my training. We've talked about it. You remember? Going once, going twice. Paul, front of the class, man. M&A. There's been an offer for a buyout, guarantee it, right? And the offer was probably at $42, right? So it was cooking along here at 39. It gapped overnight to 42, and it went absolutely flat. So one of two things is going to happen with the buyout is either going to go through at $42, and all the shareholders get $42, or it's going to fall apart and price is going to collapse. So neither of those scenarios is favorable for us. So when we see this, we just go, "Well, that's cool, good for them," and we move on to the next chart. All right. GX. And so I start and just look at a big picture. I just zoom out like you saw. I get a year and a half's worth of data. What's the big trend been, right? We're more, we're going to take our entry off current price, but we want to know the big picture, right? Look at this. Not that interesting to me, right? It went up. It was an impulsive move. This retracement was too deep. Started going up, fell apart. So, yeah. Okay. I'm not going to bore you with going through a bunch of charts because I already did it. I found some decent ones. Okay. So from my cloud scan, which I just showed you, I identified. Come on, Excel, give me a 12 good trade candidates. And then I did another filter on the 50-day moving average, and I got 4. So we got a total of 16 pretty decent trades here. But let me show you what we're looking at. Well, I think they're decent. Okay. AROC Energy. Okay. Remember what I said about Elliott Wave? Simple. No need to make it any kind of voodoo thing here. Okay. What'd I say? Big move, correction, follow through. Anybody see a big move, correction, and the potential for a follow through there? Right. And I said, I like proof. I use Dow theory. What's proof that this follow through is happening? Well, Dow, high, higher low, new high. Do we have a new high yet? Not yet. Not yet. But if and when we get a new high, that would be a super interesting trade. So I'd do what I call put it on a watch list, right, which is this. Put it on a watch list over here. The long trade. If it triggers at some price, which would be 1039, come back and look at it, because that just might be an awesome trade. Okay. And then the other thing we do, we're in the middle of earnings season. Half the S&P 500 is reported, the other half have not. I don't want to take a new trade right into earnings, because earnings can be a surprise, right? The market prices stocks based on all known public information, right? Earnings introduces new information, and the stock gets repriced, sometimes dramatically. Who got crushed last week? There were some good wins. Some big company got absolutely crushed. Anybody type it in if you remember. So we're going to worry about earnings dates, right? And it's going to stop us. So A-Rock, here is the best website on the internet for earnings dates. It's called earningswhisper.com. They got a whole thing going on. You can join, and they got this whisper indicator and all that kind of stuff. I don't care at all about that. But they have the best database, the most accurate database of earnings dates, right? So A-Rock, Archrock Energy Company, is confirmed. This check mark has been confirmed. It's coming Wednesday before the open. A-Rock's going to report earnings. Okay? And it could jump up, it could jump down. So we're going to wait for two things to happen before we trade A-Rock. We're going to get through earnings. We're going to come back and look at it and see if it triggered above this level. And we're going to see if it's still a good trade at that point. And so we would potentially take an entry somewhere here. This would be an entry price, right? At the current analysis, this would be our trade exit, right? High, higher, low, new high. If this happens and then it goes below here, that tells you the trend has failed. So this would be my trade exit point. And then what's my target? Because I said that reward to risk is important. We need a target, right? So I just used Fibonacci extensions, right? Here is the impulsive move. Here's the correction. Here's the expected follow through. And I use Fibonacci extensions, right, to predict where that follow through would go into this target zone. So let's say that we would just be very conservative. So, okay, what if it just gets into the bottom of the target zone? So I would enter here. If it triggers, my stop would be here. My target would be here. Okay. Let me move this up. So reward to risk ratio is the difference between this, which is risk, right? If I enter here and it goes down here, my close to trade, I would lose, right? I would lose 1044 minus 962. So that's about 80 cents per share, right? That's risk. Reward is if it hits the target, I would from 1044 to 1204, that is $1.60. Round numbers. That's 2 to 1. Right? Lose 80 cents if it fails, and make $1.60 if it wins. It's a 2 to 1 reward to risk ratio that we can just see visually here on the chart. Right? There's a formula to calculate that, of course, but we can see it. Risk, that's reward, that's risk. 2 to 1. Perfect. I'll take that. Okay. So we got to wait. earnings and see what happens. And by the way, if it say earnings are great and it does this on Monday, here's Monday's candle. What happened to reward the risk? If my entry is now here, it's no longer good. I'll pass. BP, it's a good chart, but we got earnings on May 2nd. BX, good long if triggered, and their past earnings, their next earnings not till July. Oh, if triggered, BX. Blackstone. Okay, been in a long downtrend, hasn't it? A series of lower lows, lower highs, lower lows, lower highs. Oh, what has happened recently? High, higher, low. Actually, that's not it. Here, high, higher, low, high, higher, low. Big move. Okay. I'll draw it. High, higher, low, high, higher, low. And you can see I've got some simple moving averages. This heavy line is a 200-day. The lighter one is a 50-day. Of course, I got the Ichimoku 5. I've got this price oscillator. Got Dow theory. I got okay. So high, higher, low, high. So technically, that's the beginning of an uptrend. But I also look and go, gosh, we got some. It went through the 200-day. The cloud just went green. So I got some things working in my favor here, don't I? Okay. Dow theory, high, higher, low, high, higher, low. So Dow theory is a check. The cloud is green and price is above it. Check. My oscillator is green. Check. Right? There's some evidence accumulating that says this could be a good trade. Price is above the 50-day moving average. Check. It's approaching the 200-day moving average. Now, what has happened in the past with the 200-day moving average? Well, that's not good. So what if, just to be conservative, we said, let's let it get above here. Because at any of these, what we did not have, high, higher, low, high, fail, right? High, higher, low, fail. What we didn't have was a real trend reversal above the 200. So high, higher, low, high, higher, low. If we get this, that's something completely new that never happened back here. So that could be good. So we would say BlackRock, trigger 95.26. Gets above that. I like that trade. Okay. That's the thought process on that one. Not ready yet. What else we got? 5.9 earnings, Chevron, energy sector, past earnings. They announced earnings Friday. Chevron, CBS. All right, let's jump out, get the big picture. All right. Big impulsive move up. Had a correction. Now it's kind of dithered around, hasn't it? Right. But Elliott wave still applies on this. So we go, okay, here's the big move up. Here's the correction. What's the target? Okay, the target is between these green lines. Okay, it's gotten close. A little setback, but what's going on with current price? Keep the target in mind. Okay. High, higher, low, high, higher, low, good earnings, right? Cloud is green. We're above the 50. In fact, we pulled down to the 50 in the middle of the cloud, found support, heading up. It had gapped up back here. That gap provided support. So we got support at this gap. We got support on the 50. We got support on the cloud. We got down through. We got a positive thing. We got green. That looks like a go. We're past earnings. Chevron looks like a good long right now. Nothing to wait for. Okay. Yeah. What would be our trade exit point? A little tough. Because it just came off this low. We don't want it to be too tight. So the target is easier. We're going to conservatively go, you know, let's going to put in some new highs. Let's make this green. Here's our target. Oops. Right. Our entry would be whatever it is on Monday. Say here. Do this. I call it the entry. Okay. My trade exit point. Where would I exit the trade? In this case, I'm going to put it right under the cloud here. All right. So if price goes below this red line, I'm going to close the trade. Okay. What's the reward to risk on this trade? This is risk. This is reward. That looks about 3-to-1 to me. All right. Let's say that we do want to take this trade Monday morning, assuming, you know, nothing dramatic happens. If it opens somewhere in this region Monday, I think I like this trade. I'm going to trade it with an option. I'm going to go buy a call option for this. Could just go buy the shares. That works. But why not get the leverage, right? And the risk control, right? That comes in as buying a call. So, you know, if you go buy a call, say you spend $100 on a call contract, how much can you lose? Absolute max. $100. Right? You can only lose what you paid for premium. So it gives you leverage, right? You buy a contract, you control 100 shares. So what contract would I use for Chevron? Let's go look at that. I'm going to go launch. I like TradeStation for charting. I like Thinkorswim for trading. And, you know, charting and Thinkorswim is awesome. I just get a little more flexibility here in TradeStation for charting. And meanwhile, while I'm bringing up Thinkorswim, and I'm going to look at the option chain and pick what I think is the ideal contract for Chevron. If you'd like me, I'll look at about 5 symbols. So whoever's first, you're up, man. But just type them in there. And C's asking, how's my experience with TradeStation web version for charting? Hate it. Hate it. I want a client-based platform to do what I do. Right. Oh, nice. TOS popped up a little notice, said, yeah, we're under maintenance right now. It may not be awesome. Okay, C would like to look at AMC. Anybody? Oh, Rich. Yeah, I kind of meant one each. I'll take a couple of years, Rich. All right, here's Thinkorswim. Let's put in Chevron. I'll share my screen here in a second. All right. All right, you guys should be seeing Chevron on Thinkorswim. Okay, same chart. Same setup. All right. So they're past earnings. That's important, right? Because if I'm going to buy a contract and maybe earnings are a month out, well, I'm not going to pay extra time when I know I'm going to exit the trade for earnings, but earnings are past. So I got lots of room in front of me. So with that said, I like to be about 45 to 60 days out. I want plenty of time for this trade to play out, right? So here we are on April 29th. 6 weeks would take us out into June. That looks good, right? July gets a little farther out, more expensive. So June 16 monthly on Chevron. And then what I do, this crossover from, blue to black here on the call side is in the money versus out of the money. We want to be in the money. I want to be in the money. Okay. Why? Delta. Delta is the amount that, so the whole deal with buying the option is, what I want to do is just get leverage. I want to go buy an option. I want Chevron to go up. I want the value of the option to go up. And when it's time to exit the trade, I want to sell the option for a profit. So I want the option contract that's going to go up in value the most with a move in the underlying in Chevron. Okay. Delta is a measure of how much the value of the contract will change given a $1 move in the underlying. And you see out of the money doesn't move nearly as much as in the money. But I like it to be in the 60 to 70 range. So the 165 strike call, June 16th expiration, Chevron contract. The 165 is actually pretty good. It's $3.58 in the money, right? It's got a huge market. Look at the open interest, right? Thousands and thousands and thousands. It's perfect, right? All right. So I would just, on Monday, if things look good, nothing's changed, go buy the June 16, 165 strike call for Chevron, $755 each. Okay. And the simple risk management approach to this is, there's two approaches. I have a basic and an advanced approach that I teach. The basic approach would be, we said, hey, don't lose more than 2% of your account on any given trade. The max you can lose on an option contract is what you paid for the contract. You cannot lose any more ever, right? So say I got a $100,000 account. I can't lose more than $2,000 per trade. Okay, these are $755 a piece. So I could buy two, would be $1,500. If I bought three, it would be $2,200. I might be tempted to go to three because it ain't going to zero. Chevron's not going to zero. We know that. Okay. So maybe get $2,000 into the trade, right? And if we hit that exit point, these are going to lose a couple $100 each, nowhere near the 2,000. If we hit the target, Chevron, they're going to double or triple in value. Woohoo! All right. That's how we approach it. Here's the other trades that look good right now. So that's CVX good now. I said VX good if it's triggered. These are watch, got earnings coming up. S, which is an energy, it's good. SWN is good now. TRP is good now. I know we're running out of time, so I did, those are good. Similar to CVX, okay? And also doing a different screen where I'm looking for things that just crossed the 50. This is just crossed the cloud, right? CNC is good and EQT is good. Okay, there's some awesome trades, all long. So I want to get to some of the symbols you guys were interested in. Let's do that. And then we'll wrap. Okay. AMC from C. Former meme stock. All right. This is what we call a bottom feeder in our live sessions, right? Because it was up, way up, got crushed. Scrunch it, you can see, right? Here's the whole meme thing, right? All this, and it drifted down back to kind of where it started, right? There's where it started, pretty much there. It's channeling. We call it a bottom feeder. Okay. blow it out a bit and see current price action. All right. When we do, what we want is evidence that this channel down at the bottom has changed and it's going to now break out and head up. We don't see evidence of that. You know, it broke here, nothing happened. Broke here, nothing happened. Went back down, right? So we see a high, higher or low until it broke out of the cloud here, right? And then it you know, the 200 kind of hits. Not that exciting for me. So right now there is absolutely no evidence that it's going to take off, right? At a minimum, right? And this would be kind of a low probability, but maybe high reward, right? If it breaks here, we'd have a high, higher level, new high. Okay. And where, you know, where would I set a target? Well, it's prior high, right? So if you got an entry 582 up to 843, that'd be a huge reward, right? That's 250 on a $5 stock. It's 50% return, right? Maybe worth it, but I wouldn't take it till it did that. All right, Richley, okay. I think that's Kellogg, like GIS. Yep. All right. An impulsive move, a little rocky, had a retracement, stayed, oops, it violated. If it goes below this red line, it's not a retracement, it is the impulsive move. So what we do is simply switch. This is the impulsive move down, this is the correction. The correction is approaching the 200, so we would expect a good chance of a reversal here. So I'm not going to take it into that. So that's my quick analysis. And C says, yeah, you know, I'm a swing trader. I take swing trades, long or short. Right? I'm looking for an impulsive move up or an impulsive move down. The highest reward, lowest risk option play on a swing trade is to take a long call or a long put. That's just mathematics. That's not an opinion. That's mathematics. Okay. So for swing trades, spreads are a disaster. They have a terrible reward to risk ratio. You know, take a spread on a swing trade, you can only make, you know, the credit you got up front, but you can lose a lot more. You can lose 5 or 6 times more. Prove it, right? There's a place for spreads. It's not for swing trades. Swing trades are for directional moves. Highest reward, lowest risk, mathematically, is a long position in the money. All right. And I know there's a bunch of people out there pitching spreads, and you know, the smart people sell premium. Different webinar. I have one. We'll prove mathematically. Well, picking up nickels in front of a scheme, taking spreads on directional trades. All right. Stay tuned for that webinar. It's a fun one. All right. We did K for Rich. Let's do Schwab or Matt. Okay, Schwab got caught up in the banking crisis that wasn't, right? And Schwab, Mr. Schwab, came out and said, I don't get it. We are strong. Nobody's, you know, Schwab's a brokerage firm and a bank. Right? He goes, nothing changed here. All right. So our expectation would be that Schwab's going to come back, right? This was the impulsive move. We want at least a correction on that move, and that would be on the magnitude of this, up between these blue lines. We could set an intermediate target in the middle, let's say here, right? Now, do we have evidence that Schwab is heading up? We have a high, higher low, high, higher low. This hasn't turned green yet. So to be conservative, let people get over the weirdness. Let's put a trigger on Schwab here at about 56.36, right? So we want to put our target here. Let's put our entry here. Let's let it prove itself. And as of this moment, we would put our stop here. That last low. So that gives us a 2-to-1, or you know, close to 2-to-1. So that's not bad. It's not bad. And if this were to get above the span B on the Ichimoku Clem, you could push an early entry on that. I would be okay with it. If the oscillator goes green, looking good, so you could take a little bit earlier entry. Okay. So Schwab is a good candidate for the watch list, but it's not ready yet for me. All right. Hey, we've been doing this for an hour. Hopefully, it looks like everybody's still hanging with me. Thank you. If you like this, I just gave you some great trade ideas, I believe. Right? We looked at live charts. Now we said, hey, finding great trade candidates like a needle in a haystack. We found some. Right? I showed you 5 or 6 that are ready to go now. Past earnings, good setup, ready to go. And I'll just recap those for you. Okay, they'll be on the recording. Chevron or BX, if it triggers, Chevron, good now. HES, good. SWN, good. TRP, good. CNC, good. Dominion, D, good. EQT, good. Okay, and we're going to review these in our trading room Monday. All right. Remember, these things are essential. Great trade setups with a high probability outcome, good reward to risk ratio, risk management, trade management. Gotta have them all. Hopefully, you believe that having all those things will help you be a profitable trader, right? How many of you are kind of excited about the trades we looked at, but maybe a little bit unsure? Okay, I actually like that Chevron trade. Maybe some of the other ones. A little shaky on what to do about it. Maybe you feel like this guy's like, whoa, that was a bunch of information. I like it. But I'm a little overwhelmed. Not a problem, right? I have an offer, right? We do this every day. We offer training. We walk you through. We publish the trades when we take them, publish updates. We manage them, right? So you need all this. Finding great trades is hard. Once you find them, you need a plan. Okay. So we run a stock and option pick service. And what we offer in the service is great trade setups. You know, Eva and I, co-hosts, do the work. All right, we give tools and training on risk management. We give tools and training on trade management. We send alerts, taking the trade, taking profit, moving the stock, closing the trade. You get up to 10 hours per month of detailed consultation because we're live every morning, right? And we have recorded training sessions. We offer a one-on-one consultation when you sign up and ongoing education. And of course, trades, right? You know, if you were to get all that from myself or others off, you know, list price for training programs and consultation, mentoring, all that stuff, you know, the cost can be thousands of dollars, right? You can get the service, it's not going to cost you thousands of dollars, right? List price of the service is $127 a month, right? $1,500 a year. It's good value at that, right? But here's the offer for today. You can try the thing for 30 days for $37. And then after that, $97 a month. And you can also switch to an annual plan once you get going if you like. Let me get this link. I'm going to post it in the chat. All right. So you can try it for 30 days for $37. And it's 100% money back guarantee. Refund on request, no questions asked. No hard feelings. Okay. And there are several existing customers because they like to come check out the trade ideas and whatever. They're online. If you want to, you know, chime in, right? You know, we try to keep it real. We're not, every trade's not going to win. We're not going to get rich. There's no pictures of Lamborghinis on my website, right? But we try and knock out a solid profit year to year. Okay. Here's what you get. You get the watch list. I showed you that, right? We're going to add these trades to the watch list Monday. You get alerts, email or text message when we're getting into a new trade. Get the exact details, entry, stop, target. So you can trade. Almost all the trades could be traded with shares or with options, your choice. We give you the option contract like I just showed. You get alerts when we make a change, move the stop, take profit, close the trade, email, text message. You get access to the Real Traders Club, which is live sessions very much like this, where we're analyzing trades, putting them on the watch list, managing them, teaching, all that kind of stuff. It's recorded, recap, can't make it real time. You don't have to go. You're offered a one-on-one consultation to help you get started. Use your platform, whatever is valuable to you. You get risk management and options trading tools and training, they come included. We have calculators and stuff for, how do I calculate share size for my account? How many contracts should I buy? We have training and tools for that included, free. Ongoing support and training, and yet there's more. I showed you Ichimoku Cloud. I have a course on how to use Ichimoku Cloud, how to set it up, how to use it. As you'll notice, my setup on the screen is different than the factory settings. I have a course. It's list price on my website, $247. If you sign up today at that link, $37, 30-day trial, money back guarantee. I'll include the course as a bonus. You get the Ichimoku Cloud training course for free. And you'll get that 30-day trial. So that's the offer. Winning stock picks, not everyone, but overall winning P&L year to year. Alerts on the trades, live trading room, watch list, training, all that stuff's included. Consultation here to help you be successful. All right, so there's the link. And hey, thank you for being here. Appreciate you giving your Saturday. And hope you found it valuable. If nothing else, you walked away with some trade ideas, maybe some new information, and love to have you be part of the service on an ongoing basis. So any questions? I'm going to go on mute here for a minute, take a drink of coffee, but give you guys time if you want to hit that link and answer any questions. I'm going to go ahead and stop the recording because the material we prepared is done, and I'm just really here to help answer questions or anything that you have.